Hey everyone, welcome back to episode 6 of the Swing Trading course. As always, be sure to head over to stockstotrade.com/free training or go to the link below. It'll be in the description. Biggest reason I want you there, drop your email. You'll get access to all the other videos. Hopefully you're following along in sequence, but if you're not, you'll get access to the other videos. You'll get access to the other courses. And then the big thing is the worksheets that we've worked on through this course, giving you that tool. I mean, I just think it's free, but I could probably, I don't know, I could probably charge $100 for that sheet. I mean, I spent years and years developing that, and it may look simple, but it's really the key to breaking down this process. And then you also get access to the watch list. So it's a win-win-win. You can unsubscribe if you want, but go to stockstotrade.com/free training to get access to all of these things. All right. So today we're going to talk about the order types to semi-automate your trading. And ultimately, the biggest point of this course, as you know, looking to make good size gains, good risk to reward without having to sit there at the computer 12 hours a day. Now, maybe you want to do that. I mean, ultimately, a lot of you just can't. I mean, you've got jobs, you've got things you need to do. So what's great about these order types, it allows you to semi-automate your trading. Now, this isn't like a complete automated system, which I don't believe in anyway. I think, listen, the stocks we trade are based on human emotions. You need to read things as a human. You need to make decisions. I mean, this isn't, well, listen, if you've got a billion-dollar data center and you're front-running everybody with some algo, that's different. But you need a billion-dollar data center like Blackstone or Citadel or somebody that's probably not accessible to you. So, but we can semi-automate things. So when we're talking about entries, what I use, and I'm going to give you my own little kind of jargon, but the order type is what's called a stop limit order, okay? And I'm going to change that jargon because I think that there's so many things in trading that, well, in everything, I guess, but that are kind of misunderstood. And people hear stop limit order, and their first thought is it's a stop loss order, like a stop order. And we're going to talk about stop orders after this one, but a stop limit order is what we use to actually enter. Bear with me, but what I call it is a stop trigger order, and it just makes so much more sense to me. And let me explain why. So what a stop limit order is, you have a stop price and then a limit price. Okay, hopefully you're familiar with limit orders, market orders. If you're not, take advantage of the channel. Okay, on the Stocks Trade channel, we break down all the basic terms, etc. But what a stop limit order does is it's got a component of a stop price, which is actually the trigger that enters your limit order, okay? And we use this because a lot of these stocks that we talk about, and a lot of these entries we look at, we're looking for breaking through key levels, whether that be a 52-week high, a whole dollar, half dollar, a red to green, any of these levels that we look at, we need to enter that order when we're away from the computer, or we're doing other things, or we're busy, whatever. So let's say we're looking to buy a stock that spiked big, and then we're looking at the previous day's level, which is a great level we look at. So it spiked from 5 to 10 yesterday, pulled back today, maybe it's in the 7, the 8s, and then we're looking to buy at 10. Well, if we use a limit order, that limit order is going to fill us down in the 7 or 8s. We're not trying to play guessing games. We're not trying to dip buy. We want to buy these stocks when they break through levels. So if we have a stop at 10 that enters a limit order at, say, 10.10, 10.25, slightly above the trading price, that order doesn't get entered or executed until the level hits. So let's say this stock that we're looking at, it's our number one idea, goes through the day and just sideways, never does anything, stays in the 7s and 8s. You don't want to trade that. You don't want to enter that stock. Or let's say it fades and goes nowhere and actually goes lower all day. Again, you don't want to enter that. Stop limit, aka stop trigger order, allows you to enter that stock when a key level is broke, our target area. Again, if you're on pre-market prep, you might hear me say that a lot. Pre-market prep, I'm live every day, 8:30 Eastern on the Stocks to Trade channel, but you'll hear me call out these levels because these are those key psychological levels, previous days, red to greens, breakouts, all whole dollar, half dollars that we look at, and you'll constantly see the volume flow in. We want to ride that volume wave, and that's what the stop limit order does. And ultimately, you're probably under the PDT, you probably have a small account. It keeps you out of trades. I know, nobody wants to hear that. But you got to conserve your day trades. You got to conserve your capital. You got to conserve your buying power. So don't underestimate the value of staying out of a trade. So that stop limit order allows you to enter at your price when the key level is hit. Okay? Then the next order type we use is that stop order. Okay? So back to our analogy, or our example, we're buying that break of 10. Our stop is, say, 9. That's our area. And then our goal would be more like 13. We're always looking for that 3-to-1 risk to reward. Talked about that earlier a lot. But if we're risking $1, we want the potential to make $3 or more to get our risk to reward in line. So after we enter the stock, stop limit order executes. We're in at 10:01, say. You enter a stop order at 9, maybe 9:01. I like to kind of stay away from whole dollar, half dollars to get, to keep from getting my order hunted. But what'll happen if that stock fails, which nothing's guaranteed, you got to have a stop, and it falls back down to 9:01, takes you out of the trade. You can, again, in essence, maybe you're at work, you get a ding, you get a notification, you're like, oh, I got stopped out. It's part of the trading, that's just part of what happens sometimes when trades don't work. But what's great about what we do here, we focus on the best risk to reward so that when you do lose $1 a share, you lose $1 a share, lose $1 a share, but then you have a couple winning trades. Now you're up $6 a share, so you're up $3 a share overall. That's how you grow your account. That's how you get profitable over time. Stay away from anybody that talks about these 100% win rates or even 90% win rates. I mean, listen, when you're swing trading, if you're trading the right stocks, you can have a 50% win rate and still grow your account and still make real money by using the right strategies. Then last thing is notice both these order types, I'm defining my entry, I'm defining my exit, okay? Then on my goal, I'm using a limit order to sell, okay? So again, I'm in that stock at 10, my goal is 13. I use a limit sell to sell me at 13 when that stock hits my goal. I'm not using market orders. Please, please, please don't use market orders, okay? Your 3 order types for swing trading: stop limits, AKA stop triggers for entries, stop orders for your stop, obviously, to take out your stop loss. Then we're using a limit sell to hit our goal. So, hey everyone, hopefully you enjoyed this course. I think swing trading is one of the best ways to grow your account and learn without taking crazy risks. Listen, I love day trading, but a lot of people rush into trading those volatile stocks too soon, too fast, and they take big losses. So focus on swing trading. Head over to stocks2trade.com/free training. You'll get the watch list, you'll get the guides, you'll get access to everything. And then the biggest thing is, if you enjoyed this course, if you like my approach, if you like the way I teach, if you like the way I kind of go into things, check out the Steady Trade team. It's a mentorship program where I do 2 webinars a day every single trading day. I'm live in chat all day long. There's an archive of over 3,000 webinars. I've got a document of 3,000 webinar notes in Evernote that you have access to. We've got mini lessons. We've got more worksheets. We've got scanners. It's a huge plethora of information. Check out the Steady Trade team. I would love to work with you. It's a very small group, but it's the best way to take it to the next level.